Good afternoon, everybody. Microphone check. Looks like everything's working correctly here. Good, good. Oh. Could have sworn I paused the music, but all right, we'll go with that. All right, welcome, welcome. Hopefully everyone had a great trading day today. Hopefully you have, well, yeah, I mean, it moved all right. So, you know, fingers crossed everything went to plan, if you will. As always, before we jump on in, there's plenty of things to talk about. The markets are moving quite a bit, and especially with tomorrow being Friday the 13th, for all of you out there that might be a little bit superstitious, should be an interesting one. Before we jump on in, though, as always, swing on over to slingshotfutures.com, scroll down, and click on the newsletter registration. That's where you can sign up for our free newsletter that will be sent to you generally every day, Monday through Thursday. We don't really do anything on Friday. That's the end of the week. Hard to really predict or make any predictions when it's going into the weekend and the markets aren't moving. So that will get you basically in line with our email newsletter list. You'll be notified every time one of these videos comes out, and along with that, in the newsletter, we talk about a bunch of stuff we just don't have time to talk about during the day in the live stream here, and that's going to be everything from stocks, crypto, options, you name it. If it's moving, it'll show up in there at some point, so make sure to sign up for that so you don't miss anything important. Of course, along with that, the 3-day trial right here, that's where you can sign up for our free 3-day trial in the room. You can hang out with us for a couple days, see how we're approaching the markets, see how we're analyzing the markets, trading the markets, and all that kind of fun stuff. Get your feet a little bit wet, ask some questions, and have some fun with us for a couple days in the room. So make sure to sign up for that if you haven't done so already. Now, taking a look at the news for tomorrow, you'll notice something stands out pretty obviously. Uh-oh. No events scheduled. There are no news announcements for tomorrow. I'm not a huge fan of seeing that. Generally, I want to see something, right? But there are no big news announcements scheduled for tomorrow. Along with that, tomorrow is Friday the 13th, which generally for me, I really don't care, but it does seem as though a lot of traders do care about that, and that causes the markets to be a little bit jumpy every once in a while. Kind of a strange phenomenon, probably one of those self-fulfilling prophecy kind of things. Oh yeah, chalk it up to Friday the 13th, you know? So just play it a little bit safe going into tomorrow. There's no news event scheduled, or at least big news announcements. It's Friday the 13th. We're going into the weekend. It's summer, so it's beautiful outside. Nobody wants to hang around on a Friday going on past 12 o'clock. It's time to hit the beach at that point, so make sure to stay a little bit cautious going into tomorrow's trading. Now, looking at the overall movement for today. Now, the overall grand scheme of things, the euro and some of the other markets, we're in a little bit of an interesting spot here. So the euro, we're stuck, right? If we look at the 4-hour chart, we can see we had a huge bear bar down and then nothing, right? Nothing happened on the euro. And really, this is kind of what we were looking for, in all honesty. Remember, yesterday we were talking about how we wanted to see a pause on the chart, a push up to find resistance, and then a drive lower. Now, it did push up, and we found that drive lower. So that worked out beautifully. But the thing is, we're still not going anywhere, right? The breakdown completely failed. It didn't make it down to support. And now we have, what, 4, 8, 12, 16, 18 hours, 20 hours worth of range. Nothing's happened. The market's tried to break out, up, down, and it's failed every single time. Currently, it's trying to break out to the upside. Very likely that's not going to stick around either. So that's kind of the situation that we're dealing with right now. We don't have much to work with in terms of the overall movement. We're stuck in a situation that the euro is pinned, and we need to get away from this area. Now, one of the big things that I would like to see on the euro is continuation to the downside. Again, referring back to the daily chart like we were looking at yesterday, we want to look at a little bit more confirmation. See the sellers coming back in and trying to drive the market down after a corrective phase up. Now, like we said, that already happened, but I would like to see this candle close weak bull, meaning a lot of wick on the highs and a small little body. But because we already have a lot of wick on the bottom with that earlier failure to the downside, I would prefer to see today close as a weak bull bar nowhere near the highs of the wick, or a doji or small bear bar if the sellers are going to keep this drive going to the downside. Really, I think the sellers just do not want to see a strong bull bar. If we get a strong bull bar, there is a chance that it ends up being a trap, right? So let's say the candle closes like this, or maybe even a little bit stronger, right? We'll put the candle close right there. So if that's the case, a lot of traders who are short already will put their stops above that high because they don't want to deal with a reversal and they just want to get out of the trade. And if that's the case, we should see a lift in price, right? A bunch of sellers exiting means buying, right? Buy stops. So that should potentially drive the market higher. But The caveat is that if sellers are still interested, they'll utilize this information to their advantage and say, hey, you know what? I know a lot of traders are going to put their stops above the high of a strong bull bar. I'm going to sell more because I still want this to fall, and they'll sell into those, and you'll see a quick little stop pop up, and then it'll turn right back down again because all of those stops were absorbed by the sellers. So it's going to be a key area going into well, really in the next day or so once this candle closes, seeing where this candle closes, how it closes, if it closes strong or weak. If it's weak, definitely more of a bear sentiment. If it's strong, yeah, I'd rather stay away, be a little bit more cautious. We do still have support below us on the euro at 16,990 and 16,910. Of course, the big round number at 17,000 will probably play a role in things too. For the most part, though, the way that this all looks, we're just kind of range bound, and we're not really doing a whole lot. So until we get to the extremes, really just kind of sitting on hands for the euro for the time being going into tomorrow. Over on gold, gold had a nice little push down to support at 1242.9 and bounced back up. So far, beautiful bounce higher, and we are in a higher low scenario. This is exactly really what we've been wanting to see since back here, but it kind of chopped through that a little bit. And this is kind of a zone of interest now because this was the major level of support. We can see that the buyers bought ahead of it. They held it here, obviously. The breakdown below that was a complete failure. So when the market comes back to it, now we have to start thinking, okay, well, it's broken down, but that didn't stop them last time. So is this just a fake out and it goes flying higher? Or is this a breakout pullback scenario where sellers are looking to jump in and finish the drive down? I think we really need to wait for a little more confirmation before we can make the call on which way that it's going to go based off of that type of analysis. We have a really strong bear bar down and not really any follow through. So sellers are probably in, and they're probably getting a little bit nervous. And usually when you have a big blow off candle like that, I like looking at the extremes of those. So a bear bar, I want to be looking at the highs of that candle because that's where all of those sellers are going to have their stops. And just like we talked about in the euro, that's going to be the area where if sellers want to re-enter again and reposition for a slightly better point, that's where they're going to do it. And that's going to allow a trap on the highs and a push back. So that is a big area of interest on the highs of that big blow-off candle right there. It's going to be at 51.9. Let's see here. Let's make this a dash dot, thickness of 3. There we go. So 1251.9 is that area of interest. You know, it could go above it a little bit is fine, but generally speaking, if it is going to be a trap and a roll back over, it shouldn't break above that by much. So that's going to be the area that I'm looking at going into tomorrow's trading. So basically on gold, looking for a little bit more continuation to the upside, but likely very weak and sideways, right? A little bit choppy, sloppy like we're seeing here, seeing that continue to grind its way up into that area, and then look for a reactionary point off of those highs to see if they can drive back down again. If that level fails and it breaks back above it with aggression, we can utilize it as support instead. Over on crude oil is continuing its descent to the downside. Buyers are looking like they're trying to defend, at least on the initial test. We can see here, there's a huge amount of wick right there. Buyers defended that low, and they're now defending this low as well. They're not holding it very well, let's be honest here. We've got about 45 minutes, and it's still in breakdown mode, closing underneath those lows, trying to get that continuation down. So with such a huge bear bar down, that starts making us think, well, wait a minute, you know, we wanted to see that little bit of a backup and continuation, but now we're running into a little bit of a hard time. I still have a really hard time not thinking that this is just a pullback in an overall stronger trend, but if we refer back to the daily chart here, we can see that the sellers are continuing. And even though on a more zoomed in view, like a 4-hour chart, we can see that they are bouncing nicely, we have some issues here. The buyers are running into some problems, and if we get continuation with another strong bear bar after the one that happened yesterday, that can definitely cause some issues. And if it wants to go even further, a third bear bar down, that would practically invalidate all of the bullishness. So yesterday we were talking about how I just don't believe this pullback, and I would like to see the buyers continue it back to the upside. That doesn't look like what they have in store right now, and the sellers are attempting to take over. That means that looking for support a little further down. The anticipation that sellers will keep driving this lower makes more sense now that we have more information. 68.21 is going to be that level of support at the next zone of interest, and that's the last place that the market really consolidated before it went flying higher. So that's going to be the area that I am paying attention to going into tomorrow, and the assumption that sellers will continue this drive down is what I'm going with going into tonight. Now, what I would really like to see in the back of my mind, again, I still think this is a bull trend. I would like to see a strong bear bar down, followed up immediately by a bull bar up, showing a potential twin reversal failure and a cycle back higher. All depends on what the market wants to do, though. So right now, leaning just slightly on the sell side for crude oil, maybe rolling over to the buy side, depending on how they respond in these areas. Otherwise, if it does fall, looking for support at 68.21. And then we have the S&P. The S&P is rallying higher. All of the index markets are rallying higher. This is exactly what we were looking for yesterday. And we did get the all-time highs on the NASDAQ, exactly like we said yesterday. I don't think we could have nailed that one anymore. But again, this goes back to, I just don't believe them, right? We have a very strong rally up, and this is what I wanted to see on crude oil, to be fair. But we have a very strong rally higher, a pop down, and a weak bear bar down there. It just doesn't look like it's going to stick around. That's a lot of weakness here, and they're popping back up again, going into the highs. Now, the all-time highs on the S&P are still way far away, 28.87. The all-time highs on the Dow are pretty far up there at 26,693. And the NASDAQ, well, we're already at all-time highs as it stands right now. So the NASDAQ is at all-time highs right now, pushing higher. It looks really, really strong, really aggressive bull rally up, and an absolutely perfect call from what we were looking at yesterday. Now, with the S&P, we have filled in the gap. We filled in the gap. We don't have to worry about that anymore. That is done and gone. And we're breaking above the range highs, 27.93. If we refer back to the daily chart here, and we look at the S&P, that is the range high that's been coming in for quite a while. We had resistance, resistance, resistance. We're probably going to see some resistance here as well at 27.93. Now, if we zoom in even farther and we look at a really close time frame, this is a 2000 tick chart, we can see that they did actually respect it very nicely as resistance, and once it broke, as support. So that level was definitely a nice playable area of interest for today, but now we're breaking above it, and the buyers are trying to get that run going. We have another situation of very strong bull rallying, strong bull bar followed up with a small one, an engulfing bull bar. Weakness here, but then a nice little blow off there. If we can see this continue up, very likely buyers are in this, and they're still looking for more. You know, a lot of buyers will be buying in all the way up and buying into the pullback with the assumption that it'll make it back to the highs. But if it starts breaking out with some leg to the upside, this could easily go a lot further. So the S&P does have a lot of potential here to keep going, but I have to keep in the back of my mind that we are at the highs of a range, and a lot of traders who've been buying in on this rally up and on the pullback are going to be exiting up here with some profit taking. So what that basically means is what I want to see going into tonight, into tomorrow, would be a shallow pullback to retest support and then a bounce back up. If the buyers are going to continue it, they should be able to do it from there. If they fail, it'll be pretty obvious, and we can use it as resistance. So going into tomorrow, I would like to see a shallow pullback back down to 27.93 for a bounce back up. Doesn't necessarily mean the market's going to do it. As we all know, the market is going to do whatever it wants to do, and hopefully you're along on the right side for the ride. So that's kind of the situation that I'm approaching the S&P with. Just looking for a shallow pullback down to 27.93 to look for continuation bouncing to the upside, at least short-term bouncing. If it does end up breaking through, then looking for a failure move, potentially all the way back down to 27.70s. So that's going to do it for the futures outlook so far. I'll give everyone a little bit of time. Type in any of those questions that you may have, any markets you want me to take a look at. We'll lock and load those up, and then once we're done there, we'll wrap it up. In terms of the stock side of things, really the big player today was AVGO. AVGO was an absolute monster to the downside on the buyout news of CA, and man alive, that thing just went through the floor. It opened up with a gap down of, man, what did it, yesterday it closed at 243.44, and it opened up today at 207. So, you know, a solid $40 drop on the open for Broadcom. It's been rallying up ever since. There was a nice breakout in the morning session to the downside, but that's it. Ever since then, it's been in an upward trend. It's just starting to break down that upward trend now. It does have a chance that it might try to make its way back lower. Really, I think the big line in the sand is the $200 level. Everybody's going to be having an eyeball on that $200 level, and after it broke down and popped back up, that was the support. We had support here, support there, and it never looked back. So if it can break down through 200, there's a good chance that it makes a run down towards 195 and lower. But until then, I think it's going to have a really hard time. The only thing going for the sellers right now is the fact that the rising support is now breaking down, and the sellers will try to get one more leg lower, maybe just to the VWAP. We'll have to wait and see. But that's really about the only stock that was really running today. Everything else was just kind of blah. Just kind of blah. Can you give a perspective on where we're at on the crude weekly chart? The weekly chart, zooming way out. Yeah, for sure. Let me load up the crude. Is it W? 1W? I think that's the weekly. I don't think I've ever loaded up a weekly, so give this a second here. It's got to load everything. At some point. There we go. So in terms of the weekly outlook, let me get rid of the global drawing objects. This is just in the way right now. The weekly outlook obviously is still bearish, right? I mean, it's fallen from $130, $140 plus. But I think the big thing that really stands out here for crude oil on the weekly chart is that the buyers are still heavily in control, and we have a situation where we have a higher low reversal, right? They have a higher low, it turned all the way back up, it broke above those highs. Those highs become a big line in the sand, right? Those highs were back at $60. So not only is it a line in the sand with a double top breakout, but it's also the $60 mark, as if it could get any stronger. Once it finally broke out of that, it pulled back and held it as support. And as long as that support stays intact, this has the chance to rally all the way back up to the highs. Now, a little bit of a caveat here. Do I think that this is going to go to 140 again? It could, right? The markets can do whatever they want. I mean, if you've been trading for longer than a couple weeks, you already know that. It'll do whatever it wants, whether you want it to or not. But this looks like it's starting to build in a little bit of weakness. The buyers aren't breaking out as far anymore. The breakouts are less aggressive. The pullbacks are beginning to get a little bit deeper. It just looks like it needs a little bit of a rest. Now, a little bit of a rest could simply be a pullback to retest that double top support again at $60. It could also be a retest of the originating bull spike to the upside, right? We had a really strong bull rally higher. Those areas become support. So that is something to keep in mind. It's just looking a little bit top heavy right now. We're just now getting above the moving averages. The first time the moving averages price has actually gotten above them for, well, when was this? 2014. So 2014 was the last time that we saw a price above the moving averages. And with such a heavy downtrend, I have to assume that a lot of sellers are going to be looking at this saying, oh man, it's a sale price, right? Look how far up this is. The first time it's gotten above the moving averages. AK, just a, cough, cough side note, none of the moving averages have actually crossed. And a lot of times what you'll end up seeing is you'll see price start going above the moving averages, start kind of consolidating a little bit. You'll see the moving averages just cross over, right? You'll have something, purple, I guess, something like this, and then they'll all coil back over again and the market takes a dump. So I'm not convinced to the upside yet. I think we need a lot more conviction to the highs. I think the overall sentiment has already broken out when we broke above that double top at 60 and retested it. That's going to be the line in the sand. Right now, that's pretty far away. I mean, you're talking about $9, $10 away from that level. But this is a very bullish potential chart. Given the previous bear trend, though, I have to reduce its probability. I have to look at this and say, well, it has a chance of going absolutely crazy and doubling all the way up to the highs to 120 or more. But what's the chance of that happening right this second? I can't give it more than 40%. And what does that mean? Flip side, sellers have a 60% opportunity, right? So that's kind of the way that this looks right now. I think the big line in the sand for the sellers, if it were me, I would rather look for a trap back here at around the $82, $83 area. I think it looks a lot nicer for potential play to the downside, just given the fact that we have a higher low reversal here, and they're trying to kick it up a notch. Usually, those will move in deviation legs, and it doesn't look like we're quite there yet. So I would like to see a pop up to the $82, $83 mark for a rotation down, but I'm just not convinced by the buyers yet. It's going to take a lot more than this to convince me that the buyers have fully taken over on the weekly time frame. So 60% to the downside, I think the sellers have a better edge. And I think the way that this looks right now, especially given how bearish this candle is, I don't know, I don't really use stochastics or anything, but I'm sure if you loaded a stochastic up, you'd find a divergence there. That wouldn't be a surprise at all either. In fact, I'm kind of curious now. Let me load up the stochastic. Oh, not yet. Hasn't coiled over yet. It's trying, though. I mean, you can see it's obviously a lower high, but once this candle closes, that's where you'll probably start seeing it coil. Yeah, no problem. I'll put this back to a daily. Show globals. There we Oh, no, it's supposed to be a 4-hour chart. What? 4HR? 4. 4 hour. Okay. You know what? I'm just gonna let's do it this way. Oh, yeah, because I'm an idiot. That's why 240 minute. Got it right there. Okay. Let's load a couple more days in there. There we go. All right, I'll give everyone a little bit more time to type in any markets they want me to take a look at, and then after that, we'll wrap it up. Not a whole lot going on tomorrow. No news for tomorrow. That's a little bit worrying. And Friday the 13th on top of everything else. Might be a little bit of a nasty one. We'll have to wait and see. All right, not seeing any other comments or markets or anything coming in, so that'll do it for today. As always, if you have any questions, you can send me an email, jbrink@slingshotfutures.com. Make sure underneath the video to click on the subscribe button to the right of that, or to one of those directions on the video. I'm not sure how it's mirrored. But click the notification bell icon so you're notified every time one of these videos comes out. We usually launch 1 or 2 videos a day, except for Fridays. So make sure to get that on your notification squad list so that you're notified every time they pop up. Aside from that, though, like we always say, it doesn't matter what market you're trading. Even if it's slow and there's no news and nothing's really going on and it's dead slow, it does not matter. Always, always make a plan. Trade the plan, follow those rules, and it'll be A-okay. Until next time, enjoy the rest of the day, and hopefully you have a great trading day tomorrow. Hopefully you have a great weekend. We'll see all of you back on Monday. For you members, we'll see you back tomorrow morning. Have a good one. We'll talk to y'all later.